Welcome to the Suttie Mortgage Show, episode 3. What's up, everyone? Welcome to the Suttie Mortgage Show, episode number 3. Lots of stuff to talk to you today. We had some big news, obviously, in the mortgage market we'll get to, but let's jam right in. So the first thing I like to kick off with is, what did I learn this week? Well, I learned that apparently Instagram stories are only like a minute long, or you have to like stack your videos. So I posted like 2 videos, which I thought were really good, and they were like a minute 12, so I lost 12 seconds of content, and I think it was pretty cool. So I learned that the hard way. But that leads me to something maybe you guys could help me with, and that is, where do people really like to see this type of content? Do they want to see it in their post so it's there and it kind of stays there? Again, limited to a minute there. Are they okay with a little bit longer content and put it on IGTV? Or do they like these really short snippets on Instagram stories, but then they just disappear? I don't know. We were kind of playing with that a little bit, so I'd love to hear your guys' thoughts about what you like to see when you get that kind of content. Let's get into the big news. Prime rate. So the Bank of Canada yesterday dropped their overnight lending rate 0.5 point. So and then with that correlated into is all the lenders have decreased their prime rate. The average prime rate was 3.95, and now it's 3.45. So if you're a fixed rate mortgage client, that means nothing to you. Your mortgage rates are locked in, but even if you're looking to get a new mortgage, the fixed rate isn't affected by the overnight lending rate. It's affected by the bond yields in the bond market. Who's affected by this announcement are people with variable rate mortgages and adjustable rate mortgages. If you have a variable rate mortgage, what that means is your payments don't change, just the dedication to interest within that payment changes. So when rates come down, you pay less interest within that payment and more principal, and when rates go up, you pay more interest within that payment and less principal. So in this case, awesome news, less interest on the payments, more principal. If you have an adjustable rate mortgage, what's going to happen is the payment's just going to drop. Because the interest drops, the payment drops. Some people like that idea, but what I suggest is you call your mortgage broker, lender, or bank and say, hey, put my payments back up to where they were. For the last 2 years you've been making it. You should be used to it. Your budget should be a part of it. So why not leave it and start cranking down some of the principal and getting yourself farther off and closer to paying that mortgage off? So again, if you have adjustable rate mortgage, call your lender, mortgage broker, and get them to put the payment back up. If you don't know which one you have, by all means call us and we can look into it for you. It doesn't even matter if we did the mortgage or not. We can jam in and maybe see if we can help you out. So that's really important. Who do we hope this week is first-time home buyers? We saw 3 new first-time home buyers coming to the office. They were, I love first-time home buyers, super green, excited, nervous, and I just know that we do a real great job of kind of walking them through the process. So I would say the 2 things that really help first-time home buyers when they come to our office is, first and foremost, we make them a customized roadmap. We do it for all our clients, but where the first-time home buyers really enjoy it, because then they know exactly what's going to happen, when it's going to happen, and how it's going to happen. They have an overall feel of how this transaction is going to go. So we think that's a lot of benefit. We give that to them. Then the other benefit we have is when we present clients with a mortgage option, we actually present them with 5 different lenders and break down all of the options, the rate, the prepayment, the penalty, the customer, all that stuff. And that way they can see in one spot who does what, and they start to get a feel of what's actually really important to them in this transaction. Is the rate the most important thing? Is it the prepayment? And it's really easy and real visual. So we found that tool, that comparison tool, is awesome and really helps those first-time home buyers. So I know if you're a first-time home buyer out there and you're kind of struggling and don't know where to go, or don't think you're getting the right information, by all means, please reach out to us. I think we can help you with that. So let's get into probably the most popular segment, and that's the question of the week. The question of the week this week is, what's the difference between an appraisal and an inspection? Super common. People get this confused all the time. The lender asks for an appraisal. They want to know why they want to see the inspection, and so on and so forth. So let's clear this up for you. What is an appraisal? An appraisal is when a certified, a professional appraiser goes to the property. They get a feeling of just the overall feeling. They don't care if the floors are messy, but an overall feeling of the property, goes back to their office, goes on realtor.ca and digs into the comparables. What sold similar to that property in the recent past, and then comes up with a market value. Appraisals determine market value. Lenders are the ones to dictate whether they need that or not. Sometimes, some deals they do, some deals they don't. If you have any questions on why, let me know. But lender will call and say, hey, we need an appraisal on this property. We want to make sure it's worth $550K. A building inspection should be done by a certified, like a qualified building inspector, and they're going to go through the property in detail and find out the deficiencies, what's good, what is going to need to be worked on later, what is maybe something to walk away from. Lenders do not require an inspection, but I'm going to tell you, if you're going to buy any kind of investment that's in the hundreds of thousands of dollars, why wouldn't you pay the $500 and have someone come out, check it out, and make sure it's an actual proper investment? So appraisers, market value, inspection, kind of quality, like is it a really good investment? That's a difference between the two. Appraisals required on lender request. Inspections almost never required, but a good thing to get. Hope that you guys got awesome information. Variable rate questions, questions about appraisals, whatever it is, leave some comments, direct message me on social or LinkedIn, call us, whatever works for you. Hope all is well. Jason Suttie with Suttie Mortgage. Your story starts here.